Welcome to Strategy Saturday. I'm Charles Crillo, and today we're breaking down what is a hard money loan. These short-term loans are popular with house flippers, and they work very differently from typical bank mortgages. So let's get started. A hard money loan is a short-term loan product that is typically used to finance residential real estate flips. And unlike typical real estate loans, which require good credit and income, hard money loans are mainly underwriting by reviewing the property and the borrower's available funds. Now, since these are short-term loans ranging from 6 to 12 months, lenders are primarily concerned with the investor's ability to renovate and resell the property at a profit. And to do so, they spend more time reviewing the deal and less time reviewing the borrower. So what is a hard money loan? Number one is it's an asset-based loan. Okay, so the underwriting for hard money loans primarily focuses on the deep discount the investor has negotiated on the deal and their experience and the funds they can bring to the table. Now, some hard money lenders won't even pull credit or request tax returns. Now, I remember a seasoned hard money lender once telling me that he would gauge his aggressiveness on underwriting by reviewing his portfolio. If less than 10% of his loans were in default, he needed to become more aggressive. If more than 10% of his deals were in default, he needed to become more conservative. Number two are private lenders. So yes, there are a lot of institutional capital that lends on flip properties, but true hard money loans are typically made by private lenders who lend their own money or that of their investors. Now, as an investor, when you are speaking to that one person who is making a decision on whether you get the loan or you don't, that is very powerful. And compare this with institutional capital, where it's consistently changing the lending terms and lending one day and they're not lending the next day. And the firms that work with institutional lenders have much smaller margins, larger firms, and more capital deployed. And which means that they're maybe not interested in really developing a long-term relationship with a new flipper that's only doing 2 deals per year. And furthermore, when the market goes south and deals start to appear, institutional capital often disappears, even though it's the safest time to lend. Number 3 is fast loan approvals. So fast loan approvals are most likely the biggest benefit of obtaining a hard money loan. Simple, straightforward underwriting allows lenders to approve loans and disperse funds in days, not weeks or months. Number 4 are short-term loans. So most hard money loans typically have loan terms of 6 to 12 months, and usually you'll see a 12-month term with no prepayment penalty as lenders want their money back as soon as possible. And if investors require an extension, they will usually be required to pay additional fees to the lender. Usually they'll be required to pay their points over again. Number 5 is high down payments. So most private lenders will require borrowers to bring 20% to 35% of the purchase price to the closing table. Number 6, high interest loans. So it's not uncommon to see rates of 10% to 15% and 2 to 3 points at the closing for hard money loans. Number 7 is higher risk. So short-term investing and borrowing, especially in real estate, is riskier than buying an apartment complex with a 10-year fixed loan. You need to ensure that you purchase at deep enough discount, have sufficient funds to cover all the renovations, and are able to sell the property before hard money loan matures. Now, hard money loans are a fast and flexible way of financing a property in the short term and are designed for investors purchasing a deeply discounted property with a clear exit strategy, in most cases selling the property. Now, if you told a hard money lender you want to refinance them out, keep the property, they are now going to fully underwrite the borrower, since the borrower is, if they're unable to be approved for a loan to refinance them out, that hard money lender is going to have their money stuck in that deal for possibly years because there's no exit strategy. Maybe at that point they'll force them to sell, but really they want to keep the relationship going, so they would want you to refinance them out. But in most situations, that has to be a very strong borrower when a borrower that really purchased a deal with a really deep discount. So a good hard money lender is most interested in the deal and the purchase price, your rehab budget, your available cash, the after repair value, and the investor's team and experience. But before we wrap up, I should mention that on this show, we talk a lot about commercial multifamily properties with 5 or more units. And in the commercial multifamily realm, bridge loans are the hard money equivalent. And if you want to learn more about bridge loans, you can check out episode SS122. That's SS122. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
This episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.